This is the weekly review for the week of August 8th to August 12th. So, coming into the week for EU, I was expecting some type of buy side liquidity to be taken out, whether it was these equal highs or um, previous week's high. And I was expecting a bearish week, and that didn't really end up playing out, even though we did trade up and take buy side, but I thought we were going to come and break down more. So, starting at the beginning of the week on Monday, I was looking for a long to take these relative equal highs up here that formed prior to the non-farm payroll move down. Now, there was no high impact news on Monday. There really was no news at all or medium impact. So I saw this low time frame raid with SMT, and this displacement candle here was really what brought my attention to the charts. And we had the breaker here, and I entered in at the mean threshold of the displacement range, and I was targeting again these equal highs. Honestly, I don't really like this setup that I took. I don't know. I just, in my journal, I noted that I felt I was a little bit lucky that I was able to take some pips here. It wasn't really the cleanest setup with this just low time frame raid. I didn't really like it, so I took a partial here, and then I jammed my stop loss to break even, because I just wasn't comfortable with the trade. The rules that ICT gave was that we should have put it to 25% of the stop loss range, because price traded 50% of the way to the original take profit. But even if I put my stop loss at the 25%, I would have been taken out anyway coming into Tuesday. So Tuesday, I was still, or Monday night coming into Tuesday, I said I was going to still wait for a setup for these equal highs to be taken, but they ended up being taken during the London session on Tuesday. So Tuesday, I was just basically waiting to see if a short-term bearish setup would form, because we had a SMT here above these equal highs, but there was no fair value gap that formed on the way down here, and I noted this M15 fair value gap in OTE, which we ended up trading off of. I wouldn't buy this personally. Like, this isn't a setup here because there was no liquidity taken. I was just marking up the charts to see where price reacted from and why. And we ended up coming back up to this M5 breaker after M15 bullish break in market structure, and then traded off of it. So I didn't take any trades this day. Nothing here was really super clean. I didn't really understand this a lot. So I just left it alone. And coming into the CPI news, originally I thought that the high of the week was going to be formed on Tuesday, and I was watching this H1 fair value gap here, this one right here, and I thought CPI might trade into it and then come down to take these relative equal lows, because again, I was just looking for bearish evidence since I was very bullish on DXY. But then prior to CPI, we had this H1 break in market structure, so I decided to just leave it alone. There was really no setup here either prior to the CPI news that I could see. And then CPI took it higher into the daily fair value gap up here, taking previous week's high. And I was watching for an SMT with DXY. Um, I didn't think this low should have been taken on DXY, or that's what I was watching for last week. But we did end up taking it. But we had a SMT with GU, so GU didn't take previous week's high. And this was the first setup, or the second setup rather, that I took this week. Looking back, it wasn't the cleanest either. Um, I saw us trading off with the SMT, and there's a small fair value gap here after a shift in market structure. And I said that, if we're going to be bearish, this should be the high of the week on Wednesday. And Wednesday did turn up to be the high of the week, but I shorted a little bit too early here because this was at around 840 and price ended up going for one leg higher and formed the high of the day at London close. And then we had the setup here with the break in market structure and the fair value gap here. Here we came into it and traded down to the mean threshold of the displacement range from the low of CPI to the high of CPI. So this was a pretty clean trade. So I did set limits for this, but on my Forex funds, we never tagged into the fair value gap. Here on the Oanda feed, we did, but there were some other feeds that price never made it inside the fair value gap, let alone to the 25% level where I had my limit on. So took a loss here. Now coming into Thursday we did actually have, for me, the cleanest day of the week, where we had two trades. So nothing was clear to me until pretty much the end of New York session here. I was just watching this. Nothing here stood out to me, Then here at the end of New York session, we traded back up into this M5 fair value gap here. Originally, I was watching this fair value gap right here. This was a M5 and an M15 fair value gap. But price didn't do anything here. We didn't form a setup here or anything. Just consolidated and ended up running higher. But at this fair value gap up here, we ended up creating a low time frame setup, taking out the short-term buy side, and then had very clear and clean displacement down here at 10. This candle closed at 10:45. So despite not having an SMT here from this low time frame raid or an SMT with previous day's high, or even taking high time frame liquidity, the reason why I felt this setup was extremely logical was because the high of the day formed at 10 o'clock and we had this break in market structure at 10:40. So just the likelihood of, based on the daily power 3 candle, of price at 10:45 making a higher high is extremely low. So that's why I was able to trust this low time frame setup that it would play out. I initially missed the RTO because I was doing the dishes, but then when I came back to the charts, I saw this institutional order flow entry drill forming, and that's the setup that I got in at. Now, normally I would put my entry higher at the 25%, but due to the time of day being 11:30, I thought that price was just going to wick into this fair value gap slightly and then drop off down to take these relative equal lows in discount of the daily range. So that 50% is just from the low of the day to the high of the day. But surprisingly, we ended up retracing and almost taking me out here, literally like 0.5 pips away from hitting my stop loss, and then we reversed and went down. So even though we followed, like everything here was logical, I just totally did not expect us at 11:30 to retrace all the way almost to the top of this Fair Valley Gap here before coming down. Now, I was also watching GU, and GU formed a similar setup, but it was not as clean because here at the break and market structure, we didn't have a closure, we just had a wick, and it came up here, right? But then for the institutional order flow entry drill, we didn't respect the M5 Fair Valley Gap at all. We blew up past it, and then after London close session, we came in, we took this low here. So the setup or the comparable setup for GU is not clean at all. The reason why I went with EU is because we had a very clear target here of equal lows, and it also being in discount of the daily range, where GU had already came down into discount, and its range was also much smaller. So I just felt that EU was going to end up being the cleaner trade. But yeah, this was a very clean and logical day for me. I wish I could have gotten this entry here as well. But yeah, both of these trades were very nice. And then on Friday, I was expecting more selling. Originally, I was looking for previous day's high to be rated. But coming into New York session here, I saw that we had this SMT with GU. Oh, I have an EU here. So GU rated Asia high where EU did not, and we started breaking down here. Broke H1 market structure, came back up to a Fair Valley Gap. So I was watching previous day's low on EU, and we had a low time frame raid here with SMT. So I was watching this Fair Valley Gap, but the thing that I overlooked was that this here is discount and premium relative to previous day's range. So this red here. And the reason initially, I just was looking at this really quickly, I think. I didn't take this because this was in discount relative to this range. But relative to the larger range, it was in premium, and that larger range being this one here. From the low of Wednesday to the high that it made, just this price leg, this was still in this M5 Fair Valley Gap was still in premium. So I basically overlooked this trade. Now the trade wouldn't have played out anyway because just based on the rules, we came more than 75% of the way to previous day's low. So I would have moved my stop loss to break even, and it would have came back up and hit me or tagged me out and then took previous day's low. So regardless if I took this trade or not, it would have been a break even trade. But this was still, like I should have set limits for this. I just overlooked the premium and discount. And we ended up trading lower after taking previous day's low. And I think that, or I noted in my journal that these two Fair Valley Gaps would have been lower probability since we already took the draw on liquidity, which was previous day's low. That's why I don't think that these institutional order flow entry drills would have been as high probability as this one. But because I overlooked this trade on EU, I basically went through all the other majors on Friday to look which ones made the high of the week to take a short. So New Zealand dollar ended up making the high of the week on Friday, right? And that's what I look for now every Friday to see which pairs make, out of like all the majors, which pairs make the high of the week or the low of the week on Friday. Because just based on the weekly Power 3 candle, you're probably going to get a trade set up in the opposite direction. So AU was the weaker pair. It had a lower high made relative to Thursday high with New Zealand dollar. So I was looking for sells here. Um, and they did not play out, but I still think the logic was fine, um, because the low of the day here was made at 720, but other foreign currency pairs like EU and GU made their low of the day at the regular London close. So after this break in market structure to the downside, I was looking for shorts inside this H1 fair value gap here. And originally I had my limits at just the mean threshold of the daily range and targeting these equal lows. This one right here is the trade that I ended up kind of FOMOing into, because price came, it was one of these, no, it wasn't this one, it was then this one here. It came like real close to my entry and then started trading away, right? So I just succumbed to my emotions and I just marketed in, and that's this trade here. Um, then we had a move up and we broke market structure to the downside here during the high impact news. So I got a compound trade inside here, but we ended up just consolidating. And then near the end of London close, I just closed both of the trades, for about like a 1R loss. Um, so yeah, I still think the logic was sound. It just price didn't end up playing out that way, um, especially with New Zealand dollar. Right, we were traced up so high. Normally, I did not expect this at all, especially with a high of the week being formed on Friday. I thought we would have traded much, much lower and formed the low of the day during London close or the end of New York. Um, but perhaps it was because we already took these relative equal lows, liquidity here, and we formed a bullish short-term setup here, breaking market structure, and then coming down into this fair value gap here. When I was watching this live, personally, I just thought that this short-term setup was formed to take price higher into premium here of the daily range. Not this premium, but premium of the daily range, and then to take it lower. But again, we just ended up consolidating here, so the trade did not end up playing out. So looking at next week, I still have the same bias that I came into this week with, in terms that I'm bullish DXY and bearish foreign currency, because we came down, despite taking previous week's low, we now came down into this order block, and we have a SMT with previous month's low. So DXY made a lower low, and EU made a lower high. So EU is the weaker pair. So we're still in an area of high time frame bullish PD arrays. So I think that the draw on liquidity is going to be these equal highs and daily fair value gap up here. And we have a similar bullish structure forming. So last week we still had that break in market structure, returned to this H4 fair value gap and started pushing higher. So that's why I thought we were still going to be bullish on DXY. And now we came into a even deeper high time frame PE array and discount. The order block took previous week's low, and now we have a shift in market structure and this H4 fair value gap. So I'm thinking that the low of the week is going to form somewhere in here, and then we're going to trade higher. The same thing with EU. We have a small H4 fair value gap up here. after a shift in market structure. I'm also going to be watching these relative equal highs on EU. But my ultimate draw on liquidity is going to be this fair value gap here. So this fair value gap, the July 18th one, is the one that I'm looking at DXY, but EU already traded into it. So I'm looking at this one just below it. And I think that makes sense also because EU is the weaker pair. So it's going to, if we are bearish, it's going to trade much lower than DXY is going to trade higher. So that's why I think it's logical to target this fair value gap. Also here on the daily chart, we have a potential accumulation, manipulation, and distribution pattern going on for EU. So I like this. Now looking back, kind of in hindsight, I think that it makes sense that EU traded so high up into this fair value gap because I was looking at previous week's high here to kind of just be wicked above, but that would still put us within this relative consolidation on the daily chart. The fact that we kind of extended all the way up here, I think is nice, and that's clear manipulation to the upside. And then obviously the SMT with previous month's high, we didn't take the July 1st high, and now we're starting to trade away. So I think that this is going to be the manipulation leg of this fractal here. So yeah. In terms of news, we honestly don't have that much USD news. We have medium impact news on Monday. Then Tuesday, there's nothing. And I think Wednesday is really the only high impact news for USD, which is core retail sales. So potentially I think we could have the high of the week on EU form either Tuesday or Wednesday. And then Thursday we have medium impact news. So yeah, whether the high impact news, the core retail sales forms the high of the week, or it gives the RTO and Tuesday forms the high of the week, we're going to see. But I don't think that previous week's high here should be taken. So yeah, we'll just see what ends up happening. And then again, we have these equal lows that I noted during this week. I think that's going to be the first draw on liquidity after we trade up here and then down for the potential weekly power 3.